has $3,500 laying around to buy one share of Amazon? What is going on, guys? I hope you're having a fantastic day. Welcome back to the channel. If you are new, please drop a sub, leave a like, and a comment. That is going to get you entered into this giveaway here for awesome piece of wall art as well as a $50 Amazon gift card. We are doing that at 500 subs. So we have seen an absolute trading frenzy, like insane amount of buying in both Apple and Tesla since their stock split announcements. And this has everybody thinking, do I buy now? Do I sell now? Do I buy after the split? Like, what do I do? And I think with Apple in particular, it's a company that you can hold on to in the long term, and you know that they are going to be around. They were the first $2 trillion company for a reason. They dominate the market for a reason. They have hundreds of billions of dollars of cash for a reason, right? Your dividend is safe. Any economic downturn, they are going to be able to weather the storm because of how much cash they have on hand. Tesla, on the other hand, their stock price is skyrocketing because, right, everybody who's a millennial like myself loves Elon Musk. They love the products. They're really betting on the battery technology. You're going to get new updates September 22nd from Tesla on their new developments and stuff like that. I think if you're going to get into Tesla, the play is autonomous driving. That is the X factor. I think that is where I think that they are light years ahead of the competition. And personally, I think really Tesla and Apple right now, their prices do scare me a little bit because we've had such a massive run up in these stocks with not a lot of change in underlying factors aside from, hey, you guys, you get more shares for, what you currently own right now. But the overall value of the company and your net investment hasn't changed. So I think it's one thing to be a cautious investor when you're going into stocks that have already announced a stock split, and that's why you're seeing the price skyrocket the way it is. I don't want to focus on those two companies because I don't think you're going to really go wrong investing at this point. But I want to turn my attention to several other companies that I think they have seen the massive run up that both Apple and Tesla have had, and they are going to be seriously considering doing a stock split themselves. The four companies I want to talk about are Google, Netflix, Amazon, and Chipotle. Chipotle is kind of like my X factor one. I'm not too convinced that they're going to do a split, but I could totally see them doing one in the future. So companies kind of have several different philosophies when it comes to stock splits. Some companies really like to let the stock price run up there into the thousands before they do any sort of split. Kind of like what you saw with Tesla, right? Even when it was, $900 a share before coronavirus, and then it dips way down, and then it comes back up to $1,500, and then that's when you see the stock split announcement. So they're definitely a company that was content with having their share price in the high hundreds, if you will, or even $1,000 a share price. They were cool with that. But then you see a company like Apple where they're, getting around $400, and they're like, okay, we're getting a little, we feel like we're priced a little too high for people to come in and get in if you're trading Robinhood or anything like that. So they're playing the psychological game. Okay, let's bring it down to $100, or now it's going to be more like $120 or whatever. And let's see if we can get more investors at this level. So Amazon definitely fits the category where they're comfortable with their share price being in thousands of dollars, but Amazon has had a massive run up. Like their share price compared to 5 years ago to what it is now, I mean, it's not like who has $3,500 laying around to buy one share of Amazon? Yes, you can do the stock slices, but even then, right, $2,000, $1,500 or so is going to get you half a share of Amazon. So I could absolutely see them announcing, within the next 1 to 2 years, a stock split, maybe like 5-to-1 or 7-to-1, something like that, trying to bring the share price down. And if if the behavior or anything mirrors what we have seen in the past, anytime a company announces a stock split, the share price runs up. So I think Amazon obviously is going to be around. I think they're going to rival Apple for the whole, who's worth more as far as market cap in the future. So I think if you had, $3,000, $3,500 laying around now and you want to buy a share of Amazon, go ahead. You're going to be fine. But, I think if you're looking for a company that's going to potentially split their stock in the near future, Amazon is a high contender. Google and Netflix are two other companies that have seen really good runs over the past 5 years in particular, and I would not be shocked at all to see them in response to Apple, Tesla, these other companies that are doing splits, to do a split themselves. Like, it makes sense. Google is going to continue to get invested in tech. I think they're gonna steer a little bit more away from the whole advertising and stuff like that, especially with the political environment. And that's not as steady stream of revenue for them as some of the cloud and service-based things would be. So I think the more they focus on that, the more their share price is going to grow, as well as the potential for a split. And let's be real, Netflix is going to be the company to put movie theaters out of business. I think that is enough said. Netflix dominates it. The content that they pump out is really second to none. I don't think anybody can keep up. I personally thought Netflix 5 years ago was kind of at that breaking point where they hadn't started making Netflix originals yet, and it was like, okay, you're kind of getting bored with the content on there. It's just recycled content from TV that you've already seen, stuff like that. It comes out a year later. Like, who wants to really pay for that and keep getting upcharged? But the Netflix originals are the X factor. They constantly have A-list actors, movies, all this. Everybody who's getting nominated for a Grammy or any type of award or Oscar, I think actually Grammy is singing, so I take that back. I'm an idiot. I don't watch those shows, but they're being nominated for a bunch of awards, right? So Netflix, all eyes on Netflix. Share price is right around $500. They could be in the same boat as Apple, where they see it up around $400, $500, and they say, okay, now is the time for a split. Lastly is Chipotle, and Chipotle, interestingly enough, you don't think of these fast food companies as being $1,000 a share, but Chipotle is. It's like $1,200, $1,300 a share, and they were absolutely beaten down. If you remember, several years back, they had the whole, I think it was E. coli, like, scare and everything with their chicken and their lettuce and stuff, and their share price really tanked. But since then, you have seen Chipotle absolutely dominate. I mean, I love Chipotle. I don't know anybody who really hates Chipotle. It's kind of the first choice, if you will, for healthier fast food. So where their share price is, I think they've been kind of riding there for a little bit. Like, it's been in the $800, $900, $1,000 range, so similar to Tesla, but I could definitely see them, once they push into the $1,400, $1,500 range, doing some sort of split, maybe a 4-to-1. I think 4-to-1 or 5-to-1 makes sense for them. You don't want to go really above that. And sometimes optics, or all these companies are going for, think about it from Apple's perspective. They're doing a 4-to-1 split, so they announced that at $400. They split to $100, and then they have a pullback of 20%. Now you see the share price at $80, and you're like, I don't want to be invested in Apple. Like, their share price is going to zero or something like that. So it's very much optics with these companies. And typically companies do not announce a stock split unless they have a really good 6-month outlook and they feel that they're going to be bringing positive news to the market. The last suggestion that I have for you guys, and I know I brought this up in my last stock split video, is if you want to get in on these companies like Amazon, Google, Chipotle, Netflix, companies that are hundreds and thousands of dollars a share price, I would suggest doing the stock slices by Robinhood or Fidelity, or a company that offers them, to where you can get fractional shares of a company. Now, one thing I want to point out is why you'd be doing this is to strictly get the run up once the stock split is announced, and you have to sell before the split actually happens. Because if you own less than a fractional share, if you own less than one share, or any fractional share, is not going to be divided in a stock split, right? So if you own half a share of Amazon and they are doing a 2-to-1 split, it's not like that half of a share is going to be split into fourths. You're going to be forced to sell, and then you're going to collect essentially the profits or proceeds from that sale. And it sucks, but the thought process behind this is you get in with a stock split or before a stock split with the stock slices. And so you buy half a share of Amazon. Let's say you buy it at, $3,500. They announce a stock split. You get the price ridden up to $4,500. So, prorate whatever you own, and then that's the share price you have. And then you can sell. So you can reap a 20% return, and then you could take that right around and reinvest into that company more shares than you would have originally had. And it's way better than sitting on the sidelines right now and saying, well, Amazon is too expensive right now. I'll just wait till they split. But why would you do that when you could get in on the 20-25% gain that you know historically is going to happen the second a company announces a split? So guys, that is just something to think about. Definitely do your research on a company before you get in. If you don't think they're going to be around long and weather the storm, then a lot of investors are probably thinking the same thing. And that's probably when the stock split's not going to happen. So of those four that I talked about, I would say Chipotle is the least likely of them to do a split anytime soon. But I would say you're pretty safe with those other powerhouses, if you will. So before we go, today in history, 1814. British forces capture Washington, D.C. and destroy many landmarks. That is messed up. Yo, Brits, back off. Good thing this happened in 1814 because now we are friends with the British. They are our compadres. And I'm not a big tea guy. I'm toffee and coffee guy. So that is going to do it for this video, guys. I hope you had a informative session. If you are not already subbed to the channel, please do drop a like and a comment. That would be awesome. I will see you guys tomorrow.